Hey guys, this is Thanos. Finally, Robinhood is here with its IPO after almost a year from its announcement. But is this really a stock worth buying right now? Should we wait a bit or is it better to not touch it at all? If you want to find out, stay with me because in the next couple of minutes I'm gonna give you all the details about what is really going on with the company, what's the best way to deal with it right now, and of course what I am going to do. So Robinhood, it's a really crazy story if you think about it, if you compare the hype that we had for its IPO just a year ago versus what happened with its market debut. Robinhood's trading was meant to start a new chapter for the broker. Instead, with shares falling 8.4% from the 32 billion market capitalization set by the company just hours after its debut, it represented one of the worst ever starts for an IPO of its size. It underscored how much work it will have to do to convince the investing world its business can withstand growing pressure from regulators and that the American public will keep trading once the pandemic is over. Okay, first of all, let's start with the basics. Obviously, we know that Robinhood got a 32 billion valuation. People actually bought shares at 32 million, which means that people see something in it beyond the jokes. Beyond the memes, it's a good business. The reason being is that they have a lot of users, actually 22.5 million users. They're really nice as far as cash flow, they're generating a lot of cash, 960 million in revenue just in 2020, already in Q1 2021, 520 million. So you can clearly see the trajectory here, everything seems very nice. So is the Robinhood IPO a buy? I'm not so sure it is. And here's why. Nothing is free in this world, not even the appearance of zero commissions. So when you realize that Robinhood makes 80% of its revenues from the practice of payment for order flow, it really makes you wonder about the sustainability of this business model. The company is essentially getting paid to provide others with what I consider insider information, which basically comes from market makers who execute orders for Robinhood customers. The moment that this practice starts attracting negative attention from regulators, including the SEC, Robinhood could suffer. Moreover, there's a strange thing happening with its margins. The company announced a revenue for 2020 of 960 million. However, only 5.45 million is net income. In other words, only a very small portion of the total revenue translates into profit. Now, my second concern has to do with its future users' growth. Visits to retail brokerage sites saw sharp growth in the first quarter of 2021. In January, when the GameStop saga occurred, visits to retail brokerages spiked dramatically, and this upward trend continued into February before slowing down slightly in March. Robinhood has successfully penetrated the retail investing market, displayed by its site receiving more traffic than any of the traditional retail brokerages. In both first quarter of 21 and second quarter of 21, the site was the only one in the competitive set to receive over 2,000 million visits. Not only does Robinhood.com have the most traffic, but it also have the highest number of monthly unique visitors. So you can see Robinhood.com is the go-to platform of choice for now. Now that leaves one looming question. Will Robinhood continue to be the preferred platform? A look at the rate of YoY traffic growth is a good indication of continued interest. This graph shows YoY growth in unbounced traffic, which means visits that go to more than one page, to Robinhood.com in the US. Even without the spike in growth, which is almost 600%, seen in January due to the GameStop saga, Robinhood.com was enjoying exceptional levels of growth for much of 2020. However, the picture has changed since the trading frenzy in January, and growth levels have dropped significantly. YoY growth in unbounced traffic to Robinhood.com in second quarter of 21 was less than 100%. Although unbounced visits to Robinhood.com continue to enjoy YoY growth, this growth has dropped significantly in the past 3 months. And we see a similar trend in user engagement with the site. I mean, the average time spent on Robinhood.com, a proxy for user engagement, has dropped in second quarter of 21. From highs of 12 minutes per session seen in January, In June, users spent on average 8 minutes per session on the site. Now, despite the drop, 8 minutes per session is an indication of engaged users, but we have to wait and see how things will continue to develop. Now, the last thing that makes me anxious is that we should not forget that we're talking about an IPO here, and IPOs have always been a bet. Although its IPO is different from most in that it reserved 20 to 35% of its shares for its customers, the move is part of Robinhood's push to give retail investors better access to IPOs, which are usually reserved for wealthier brokerage clients and institutional investors. IPOs essentially involve private companies becoming publicly traded ones. That is, company shares are sold to the public and then can be bought and sold on public exchanges such as the Nasdaq and the New York Stock Exchange. So far this year, there have been 261 new listings, eclipsing the 218 IPOs in 2020, according to the Renaissance Capital. This year marks the busiest one for IPOs since 2014, when there were 275. Typically, smaller investors must wait until shares start trading on an exchange. Nevertheless, whether it's Robinhood or another newly public company, there are some things to know before buying shares. Also, while many IPOs come out of the gate strong, that's not always the case, and it doesn't mean the price will keep going up. For example, Facebook, which now trades around $353, debuted in May 2012 at $38 share. By September of that year, it had dropped below $18. It took another year for it to climb back up to its initial offering price, so please be extra careful when trading IPOs. So, after all this, what should we do? Well, for me, it's a pass at the moment. Even though I believe that Robinhood is here to stay for many years, the issues that I see with the company's business model, its main source of revenue and tight margin, make me wanna wait and see how this is gonna play out for the next year or so. Now, what do you think about Robinhood IPO? Are you gonna buy or wait? Leave me a comment down below and I will see you in the next video. Bye bye.